What is margin call in Forex? Margin call is a notification that alerts you to place more funds into your trading account. Margin call is indicated as a fixed percentage defined by the broker. You can find the margin call percentage in the account specifications of your trading account. A margin call occurs when the percentage of equity in a trader's account drops below the margin level. What can you do if you get a margin call? Firstly, you can add more money into your account to increase equity. Secondly, close your position and reduce your margin requirements. Let's look at this example. Remember that your margin level is your equity divided by the margin multiplied by 100. In this example, the trader has already received a margin call notification when his margin level dropped below 100%. So always pay close attention to your margin level. Stay tuned for more educational videos with CGFX. CGFX, trade your way to success.